Hey guys, I'm Hunter with Nelson Insurance. I'm the principal agent at our independent agency here in Sioux Falls. Today we go over landlord insurance. I work with a lot of rental or real estate investors. I'm one myself, so I'm going to go over coverage you want to look out for, good companies, kind of how the market's going, but mainly coverage and how to understand your policy. So right off the bat, you got commercial property and you have residential property. Anything that is 4 units and below, it can be considered habitational. You get way more carriers, way more options. Obviously, it's going to be way cheaper for that option for those options. Right off the bat, the biggest factor is how old it is. If that thing is over 30 years old, right there, that eliminates a lot of options. If you have a property that is over 30 years old, I should say this, and it's commercial. That's what tough. So first, I'm going to start with commercial here. So it's 5 units and more, or obviously a commercial property rented out to a business. If it's over 30 years old, a lot of your locations are, or a lot of your options are eliminated. It makes it really tough. If it's not sprinklered, it's really tough. So that's an important thing to have. Roof year is extremely important. All that type of stuff. Important coverages that you're going to want on this is obviously going to be business income. That thing has to shut down for a couple months, whatever the deal is. You have a fire, you're going to want to make sure you're still getting the rent for that thing, so that way that loan's not coming out of your pocket, and your policy is going to cover that. Equipment breakdown is going to be an important thing. This is going to cover anything with your AC, your furnace, any of that type of stuff, where it is manufacturing malfunctions, it stops early. This is not going to be something that's going to cover it like a home warranty where your furnace quits after 15 years. This is something that's an early stoppage, and it's not due to negligence. So if there's no negligence and it's early stoppage, it's going to be covered. So that's where equipment breakdown comes into play. Another thing you don't want is just making sure coverage is there on the limit of the building. Some people I insure have a building built in, let's say 90 years ago, and it's an eightplex. That thing, to rebuild it, is gonna be 1.1 million, but he bought it for 160 because it's in the middle of nowhere. It's the middle of Berg, South Dakota. And so when you look at something like that, you have one or two options. You can protect your investment, and so you can insure for $200,000 and get a cheap policy. Or if it's that old and the rebuild costs that much, you would insure for 1.1 million, but obviously the policy itself is way more expensive. Now, the big factor to keep in mind with this stuff, if you insure your investment or you protect your investment, everything else is going to be depreciated too. So technically, the building is depreciated about 80% because you're protecting your investment. Now that's going to factor into water claims, roofing, everything. So you need a new roof. You're going to get about 20% of that policy because you're insuring it for about 20% of the overall value. That's a big thing to keep in mind there. So those old properties that are worth a lot and have been appreciated a lot get a little tricky because it's really going to be a huge catastrophe policy, and not so much a roof claims, your water claims, your small type of stuff. And then if you get into replacement, it's going to be really spendy. So that's commercial property for habitational. Obviously, same coverages apply, same things apply. You're gonna want to keep that stable. The market is super tough for habitational, just in general. A lot of companies are getting out of it. They're jacking up deductibles to a minimum of 5,000. They're doing ACV only on a lot of these coverages. And once again, these coverages still apply, or the endorsements still apply, that I was talking about earlier. Rental is getting very expensive. Obviously, the more units you have, the more expensive the policy is going to be. A 1 unit versus a 4 unit, massive difference. I just did a 4 unit for 500,000, and the total premium was about 4,000. That was with a $5,000 deductible, and that was for about 500. I think I said 500,000 in coverage, and it was built in the 60s. Now I just did my own property, 2-unit, built 2023, and also insured for about $450,000 with a $2,500 deductible, and that was $1,500. Now honestly, I could probably get that for cheaper, but I couldn't find anywhere else. I'm sure there is though. So obviously, year built has a huge difference, and on top of that, number of units has a huge difference. So those are things to keep in mind. Good companies right now, American Modern. American Modern is fantastic for rentals. We have almost all of our rentals with American Modern. They just cut 1,000 contracts across the nation. We had ours kept, so they cut about 90% of the contracts, and we still have access to them. So if you guys look for American Modern, we have access to them. Steadily is all right. They're for the brand new stuff. We have them. We have access to BHHC or Berkshire Homestay companies. They are good for vacant properties, tough to touch stuff. Guard we have for the motels, the old commercial properties. And then lastly, I would say Stillwater is fantastic for the brand new rentals, again, for the habitational stuff. And if you have leases risk for commercial property, again, they're fantastic. Due to the market change, they're a little tough to get insured with. So that's about it. I appreciate your guys' time here. That's about all the policies, or that's about all the coverages there. So if you got any questions, please reach out. I do a lot of rentals and help you guys. So once again, thank you.